My name is Greg Schoenberg. I'm a partner at Westcott Capital. I will be the MC for this, I think, very interestingly titled discussion. I'm going to give all of our panelists an opportunity to kick things off by introducing themselves and giving a quick description of what they do. So I'm going to start with you, Igor.
Great. Hi, everybody. My name is Igor Teletnikov. I'm the co-founder and president of AlphaPoint. So we're an infrastructure company in the blockchain space, and we provide the infrastructure to launch digital asset exchanges, as well as issuance platforms for creating assets on top of blockchain and then trading those assets in primary issuances as well as secondary markets. We've been in the space for coming up on 6 years. I have a global team, about 80 customers around the world using our technology.
Excellent. Yeah, hi. My name is Andrew Dix. I am the CEO and founder of Crowded Media Group. We are the publishers of Crowdfunding Insider and some other domains. And we cover the full stack of fintech, which includes blockchain, crypto, and online capital formation and everything else.
Scott Purcell, CEO and Chief Trust Officer for Prime Trust. We provide a lot of financial services for this space, a lot of securities offerings. Currently we have something like 1,500 live Reg A, Reg D, Reg S securities offerings, fund processing, compliance, things like that. We do trustee of assets for stablecoins. Over 24 stablecoins are currently launched with our services. We provide a lot of custody and transaction systems for exchanges and OTC desks, and we have dozens of exchanges in our system, so we're really excited about the blockchain and the future for changing the world and our position in it as a participating financial institution.
Hi, I'm Justin. I'm the founder and CEO at NetKey. We do know your customer anti-money laundering work for a number of people working in the crypto and related financial services space. I'm happy to be working with Fundopolis.
My name is Ben DeScipio. I'm the Chief Strategy Officer for Fundopolis, and you'll be hearing a little bit more about Fundopolis as we go along, but we're excited to be able to finally talk about Fundopolis. We've been working on it for about 3 years. And we are pre-launch at this point, but we expect to be launching soon as an equity crowdfunding portal, enabling everyday citizens to invest in the businesses that they love and care about, and connecting communities to businesses.
Good afternoon. I'm Dan Ham. I'm the Chief Operating Officer at Fundopolis, and I spent most of my career in the financial services industry in the trading realm, the equity trading realm, both at a listed equity stock exchange, and then I was a manager of an alternative trading system for listed equities, and then I helped found a retail alternative trading system. And I'm working with the folks at Fundopolis to get through the regulatory process and make sure that we're doing everything within the regulations so we can get the approvals to get going.
So Ben or Dan, just to kind of leave it with you here for a moment, did Fundopolis start off as a blockchain company, or did you first start with the issue of how to help bring everyday businesses into the modern day economy and sort of work backwards from there?
That's a good question. I mean,
it's a leading question too. Yeah. I think it's pretty obvious, but still, it's a good question.
We did begin as a company that wanted to connect ordinary citizens and businesses in a way that would disrupt the equity crowdfunding market, disrupt the SMB loan market, really decentralize and democratize the ability of ordinary citizens to invest in companies. And in doing that, we identified blockchain fairly early on as an enabling technology. We knew that ultimately we wanted to get to a scenario where we're not just enabling investment and getting ordinary citizens involved, but we're creating investment vehicles that could eventually be traded. That's essential to, I think, the success, a long-term success of equity crowdfunding. And in order to do that, especially for the investments at this low level, and we're talking about just ordinary businesses, brick and mortar businesses in your communities, all the way up to startups, but especially for brick and mortar businesses, which we're really kind of focusing our marketing on, the idea of the amount of costs and friction that's involved in kind of even participating in a trading system becomes very difficult. So we knew that even though regulation wasn't at the point which was going to allow it, we knew that ultimately blockchain was going to be the answer to that solution.
And so, you know, without kind of getting too deep into the wonderful forest of our current regulatory system, let me just ask you or somebody else on this panel, is there cause for optimism circa spring of 2019 relative to other periods of time and other consensus events where everyone just sort of felt like we were on the verge of everything changing? Like, why now?
Well, from my perspective, I think that, you know, we're all seeing the SEC commissioners, the SEC chairman, FINRA, they've all addressed blockchain, and when they do, they clearly say that it's the future. The question is how we get to the future. I think that, you know, maybe Dan, you can add some color here, but the problem is the 34 Act and fitting blockchain into the 34 Act, and I think that it may require regulation change, it may require other. Dan, you want to?
No, I agree with you, Ben. I think the commission is grappling with how do we take the blockchain, which is a new technology, and fit that into rules that were legislated back in the 30s and make it fit. And they're grappling with how do we best go about
Okay, so
that.
on that basis, Scott, when does the future get here?
As you know, Andrew and I have been in the crowdfunding sector since its birth. Since, you know, he and I both were working on initiatives. You know, I was in November of 2011 when it was the Entrepreneurs Access to Capital Act, later to become the Jobs Act. And everybody wanted it to be now, but it took a long time for the regulators to craft the rules, years longer than they should have. And then it took a long time for people to launch and get traction. So with the advent of blockchain and the excitement of it and the money that's coming into it, which is far beyond what we ever saw early in the crowdfunding days of you know, traditional markets, with what Fundopolis is doing and coming into this game now. Oh, I apologize for that. I thought I turned that off.
Jay Clayton.
It's probably my wife. Yeah. That would Still expecting that call. So anyhow, it is a really good timing for these guys to be getting into this sector and putting a stake in the ground, because there's so much excitement. We've had the washout from the ICOs, the early ICOs, and all the fraud and the Ponzi schemes, and now things are real, and the regulators know it, and investors know it, and market participants know it. So this is a good time for them to be doing this, and I think the future is going to accelerate rapidly.
So on that basis, you know, you mentioned that you and Andrew have been in the crowdfunding world for quite some time, since the beginning. Of course, in 2011, Amazon existed, but it wasn't Amazon as we know it today. And so I'm just wondering, when you look down the road, Andrew, maybe you can speak to this, is the sort of growing concern around mainstream businesses not being able to survive by virtue of the fact that Amazon and a couple of other massive online platforms continue to grow, does that potentially serve as that lever that can actually get regulators and others to the point where we're saying, okay, this is not just about a bunch of hedge funds participating on the blockchain or sophisticated financial institutions, but this is where it connects with Main Street? Is there reason for optimism there?
So, well, I have a tendency to be optimistic. You know, I guess that's why I got into this space and, you know, watched it waddle along, because it was a difficult birth back in 2012. But I think you bring up a very important point, that that's part of the issue. It's facilitating access to capital in an ecosystem that has evolved where it's clearly slanted towards the wealthy and not so much to everybody else. And that's a problem. It's broken. And so while we saw the Jobs Act come to fruition, where it created effectively 3 different securities exemptions for online capital formation, Reg D, 506C, Reg A+, Reg CF, I think that they're broken and they need to be fixed, specifically Reg CF. And I can dive into that, but I don't know if we want to go down that path.
You can dive a little bit, just for the purposes of everyone to understand.
So
what's up
Reg
with
D is
Reg CF.
accredited investors only. Reg D 506C allows for general solicitation, which is SEC speak, meaning you can advertise it, which was a big deal, kind of. It's kind of surprising they were never allowed to advertise private placements. Reg A Plus was a reanimated, zombied exemption that nobody ever used anywhere because it was so stupid until they fixed it and they preempted state review, and you can raise up to $50 million in that in a kind of a mini IPO type offering. And then Reg CF, you can raise up to $1.07 million from anybody and everybody in a fairly regulated environment, and I think it's too regulated. So jumping back to blockchain, can blockchain kind of save the middle class? Yeah, maybe, but first the regulators need to fix the issues with existing securities exemption, and they need to do it now. That being said, they are in the process of doing a concept review, which may or may not shake out into something good.
But, you know, under the assumption, for right or wrong, that additional regulatory soap opera continues, right? And businesses like Fundopolis and countless other businesses here are still trying to build a business that generates traction and does what it is intended to do. I'm wondering, under the CF exemption, is there something unique and special about blockchain's applicability to that? Because $1 million is as far as you can do in any given fundraise. What's your thought on that?
Well, there are platforms that are issuing crypto-based offerings.
Right. There are a couple of others.
Well, Startigen has tried to do a few, and probably Republic is currently the largest entrant in the space, and Fundopolis will soon be there as soon as FINRA stamps it with approval. And I do think that the digitization of securities is inevitable. It's just going to happen, and platforms like you guys and you guys and you guys, you all are well positioned to benefit from this, and it's going to help the entire economy.
Well, there's other reasons too. If you want to pick on Reg CF for a minute, if you are doing Reg D and you go out and sell to a lot of people, well, if you have more than 500 non-accredited investors in your company as equity owners, or more than 2,000, which would include convertible equity, it would include safes or SAFs or whatever. So if you have more than 2,000 owners, you have to become a reporting company under SEC Rule 12G, file a Form 10, and spend huge amounts of money on compliance. Reg CF allows you to have thousands of investors in your offering without having to become a reporting company. So that's very, very important. It's critical. And where blockchain comes into play in this in particular is right now, a good percentage of the crowdfunding industry uses Prime Trust. We handle escrow for them and compliance and things. So like Republic and Start Engine and Fundopolis and so many others. And traditionally, they've just issued private securities, either sending people a piece of paper as a stock certificate or giving them a book entry, so an email notice that they own shares, and the ability to tokenize those securities, so it's an electronic delivery of a security in the form of a token, is going to enable trading and liquidity. And for the middle class, that's something they've never had the opportunity to. So yeah, the dreams of investing in the next Uber or the next whatever huge IPO, most of the companies that come through these portals are never going to have an Uber IPO, but the people who invest in them deserve liquidity options. And you can't do that when it's physical pieces of paper. When it's token, then there are exchanges popping up. There's a lot of friction in the US, but they're popping up globally where you'll be able to trade these securities tokens. And so they will have, the middle class will have the opportunity to make some investments and to be able to have some upside out of it.
All right, well, I want to go back to the issue of tradability of tokens in a moment, but first, I just want to turn to Justin to talk about the KYC under Reg CF and how that poses unique challenges or not, and just have you sort of expand on that.
Well, I mean, anytime you're dealing with investment stuff, you know, for good and for bad, you're dealing with things like identity validation, KYC, and AML. You know, fortunately for Reg CF kind of offerings, you know, traditionally they would have actually been considered a very low risk kind of investment from an AML perspective. From the perspective, it's very low dollar value, and as he talked about, the friction to trade it was incredibly high. So it wasn't like a good instrument to use for money laundering. You know, as you start to tokenize it, some of those risks can potentially rise because those assets can get consolidated off platform and other things like that. That said, really the most important thing that we want to make sure of during the process that we're working with anybody, especially around things like crowdfunding, is to make that process as smooth and painless for the end user and to reduce as much friction as possible from the process, right? You know, if you think about traditional investments that you may have been involved in like the angel world or the venture world, you know, you're exchanging like giant stacks of paperwork, you're talking to each other for weeks. Like you actually literally know your investor because you've been working with them and talking to them. And on top of it, like the process of getting documented is painful. You're like filling out forms and faxing documents back and forth, and it takes days and weeks. You know, with things where you're working, you know, and targeting the middle class, targeting smaller scale investments where the person is less financially invested in it, and therefore you also want them investing less time in it, right? From a result of that, it's important to be able to get them, you know, up on board and ready to invest in a minute or less, which is something that we've spent a lot of our time on.
So,
I mean, from our perspective, one of the tough elements here is because we knew fairly early on that we were going to integrate blockchain, we knew we wanted a KYC that was in excess of what the industry demanded without making it a hurdle, which I think was the kind of the use case that really led us to Justin.
Thank you. All right, well, I want to talk a little bit more about the tradability of tokens in the future that I'm sure everyone would love to see happen, but given the fact that the focus is on small businesses in communities, are we talking, you know, in sort of the future, actually people buying and selling steaks in the local pizza place, or are we talking more around rewards and other incentives to keep loyalty high amongst the sort of investor/customers of your clients?
Well, that's interesting because so we've already licensed Alpha Point's technology for the trading platform. We know that from a regulatory perspective, we're probably not going to be there for another year or more. But one of the elements that we're using blockchain for is actually automating the perks. So within regulation crowdfunding, one of the important elements that companies have to do is they give perks, and these perks are used to encourage early investment or to encourage a little higher investment in a particular company. And then those perks become a pain management point for the company once the raise is finished. So we decided early on, because we're using blockchain, we knew we were going to be part of the relationship between that customer and that company for a long period of time. So we put together a series of offerings that actually happen after the raise is finished to help them deal with those pain points. Because if we're marketing to small businesses, they don't have the time, they don't have the money, they don't have the energy to actually focus on handling all of these potentially costly solutions to deal with these pain points.
Okay, so what are some of those pain points, just so we're clear?
So one of them is perk management. Okay. So we issue those perks on blockchain, and then those are redeemable through our mobile app. Other pain points are actually communication. You know, I have personal experience with a family member and a friend who had invested in another crowdfunding platform. They invested in a debt instrument. It was a year and a half before they heard anything from anybody. And I think that's a problem. So especially for Joe Public, for ordinary citizens, they need to know kind of what's coming next and who can they go to kind of either get information, get the status of their equity or their debt or their revenue share instrument, and maybe receive payments as well. Do I have to look in the mail? Do I have to, do I get this electronically? Who's going to call me and ask me about that? So we really handle a lot of those problems for them. In baking the behavior of those securities into the blockchain, we can help them manage the kind of the flow of behaviors that happen, so a company can actually easily deal with their right of first refusal through our program, because when somebody goes to transfer that share for, say, $8 a share and it was bought for 10, they have an opportunity to rebuy that share at $8. They immediately get notified. We set up a private portal between companies and their investors so that they can actually publish financial information, progress on projects, marketing materials, so that they can instruct their investors on how to kind of help them to create viral.
This is on a private Ethereum blockchain.
Private Ethereum blockchain, right. Right, so I kind of back to that original question, which is, the trading of these.
Yeah.
We're hoping that we can actually get a fully legal and compliant ability to trade those perks prior to actually trading those securities. And if we can do that, and we'll do that with certain direction from the SEC in terms of making sure that they don't consider those securities as well. If we can get that and we can get people actually trading perks and entitlements that come out of crowdfunding, it actually can serve as a testing ground for these ordinary citizens to actually participate within that trading platform, so that when it's time to trade the securities, they've got some trust there. They know how that system works. It's an environment that they've been in before, and I think that can be an important part of that process.
Yeah, that's actually, can I key off on that? No, you want to.
Yeah, no, I just wanted to kind of speak to a couple points there. Also weaving in a bit of the question of the regulatory landscape, what's kind of happened. I think what Fundopolis has done is really kind of seen the vision of what can be done with this technology, but they're not going to wait for regulators to approve every step of that vision. And there's already a regulatory framework in which you can launch the next generation crowdfunding platform, which I think is very much what they're doing. There's also some very significant news from the regulatory landscape that the blockchain or crypto czar of the SEC has actually issued a no action letter on a token sale. I mean, that's a significant development in the last couple of weeks or the last month or two. And the approach that Fundopolis has taken of, having a trading system ready to trade the perks, in the future, once regulatory approval comes, actually being able to trade the equity or the debt or the other instruments that are going to be available on the platform is very significant. And really the vision of you can have the pizza shop owner that wants to buy a new piece of equipment, and the local community can actually invest, $100, $1,000 in their local community. I think that's the piece that has really the potential to save the middle class.
Can I mention, so the SEC guidance on the token sale, it wasn't tradable.
Can you just kind of, oh my gosh, can you give just an overview so everybody understands what token sale you're
So it was
Everyone who flies private will like it.
yeah, it was jet token. It was a jet token. It was called jet token, where they would issue a token. You get the token, you could use it to fly private jets, but you couldn't really go to an exchange and trade it. The price wouldn't change. It's really, you could only use it for the one platform. So was it really a token? Well, I don't know. I think for the SEC, it was kind of a layup. It was kind of easy, lazy, and in fact, it didn't really disclose too much. It wasn't anything new, which comes back to the issue of tradability, which is kind of a pressing question as to how do we get there for these utility tokens? How do we get there?
Or securities tokens.
Or security. Yeah, well, yeah. That's a big problem too, isn't it, Scott?
Well, interestingly, there's this is keying off on something you said is very important. I was yesterday, Ryan from Seed Invest, now Circle, they just got their ATS approved. And the day before that, I was with the CEO of OKCoin, which has a US ATS that just isn't live yet. And one of the topics of conversation, Ryan and I were going off the rails on, is as an exchange, if you're going to allow people to trade securities tokens, how do you get the information on the company so that you can, so investors have it? Current financials, have they been sending their rewards out? Have they been making, if there are dividends or royalties or rents or interest payments, have they been making those? What's the most recent data so that the exchange can have some integrity in the securities tokens, in the securities that it has listed? And that you guys are thinking through this and that you're building the technology that helps enable that is an absolutely fundamental part of what's needed for this world of trading private securities. I don't want to just say tokens, but trading private securities in small companies to give middle class and everyone else liquidity, to give people upside. We've got to have the information flowing from the back end to these exchanges, or it's never going to work. And if it does start to work, the regulators are going to shut it down.
So I have a little bit of a hard time though when we talk about creating disclosures, financials and all that kind of stuff, and you talk about local businesses. I mean, I still get prospecti in the mail all the time, and I've never read them, right? And when you think about the middle class and the ordinary people who are going about their day, and they see that the pizza shop is raising money, you might say, okay, great, I'll kick in for the pizza shop. I'm going to go there anyway, and therefore I can kind of recoup some of the value associated with my investment. But just realistically, is having full-blown financials, is that really the answer for everyday people who potentially can back businesses in their communities?
Well, it's important to the exchanges.
Yes.
Because they're checking the boxes for their compliance obligations and listing obligations. It's important to anybody that might be writing research or media reporting on things so that they have access to the data. So yeah, I mean, we've had, like the pizza parlor, we've had alcohol companies that we've handled the Reg A offerings for, and they have tens of thousands of investors, and they're excited because of the parties that these companies throw annually or quarterly, or the free swag they're going to get in the mail, or if they're a UK investor, then they get free beer in the mail, or free vodka, or whatever.
Sorry, how do you get free beer in the mail?
Move to the UK.
That was a BrewDog offering. One of BrewDog's
Yeah, free beer was there. Yeah.
free beer.
Great.
We can do it.
Phenomenal.
We've got a vodka company
It's
now.
not
and-
tokenized.
Yeah, it should be
It's not
tokenized.
going to be very
Should be
cold, so.
But the reality is, yeah, people may focus on the rewards and they're investing because they're passionate about something. But ultimately, if the price moves up on an exchange, then they're interested in more than that. And people may not read the data, but it's there. And from an infrastructure provider, from an exchange, or a broker, or an intermediary, or a financial services firm, that data has to be there for us to do our job.
That's well understood, and obviously you
Can I
have
s-
to. Yeah.
I read those filings. I think I'm like one of probably 3 in the world that actually reads them.
Right, you're not normal.
You're right. It's a genetic flaw. I'm sorry, but I actually look for clues as to what's going on there, and that's kind of what we try and write about sometimes. So you're right. You've got to have access to certain data points, and it needs to be, statutorily required. Now, when you were making the point about smaller businesses, absolutely, you're not going to do GAAP financials and those things, but there needs to be a communication path, and I think you're already cooking some of this in your services, aren't
What are
you?
you cooking, Igor?
I mean, the transparency of the blockchain is only as good as the data that makes it onto the blockchain, right? So I think the point is there are investors that want to invest in local real estate, the new building that went up, local shops that are, whether it's new or an existing business, and if they have a rev share on the business that they actually actively participate on, they go to that shop, they go to the restaurant, and now they're actually essentially part owner in that. A lot of people will feel good about that. There's a lot of demand for that, and it'll prove itself out when the first kind of dividend payment hits the blockchain and hits their account, and it kind of becomes real. And then that itself will prove out For when secondary trading becomes available, there's this history, there's this recorded history of the payments that have been made on that asset. And that in itself will make it, increase the appetite for other investors to come in. Yeah.
So for,
I think that it's an important point I'm not sure that the trading in these asset classes are going to be, to make money necessarily. I think that we're talking about the ability to trade something. That's a far cry from speculating on a market. And in order to speculate, you need a great deal of information. And the information flow is something that I think the industry is going to have to work on as we get closer to really functional ATSs that are trading these assets. But until then, I think it's a matter of just allowing an ordinary citizen who has a life event and needs to actually recoup some money for this particular investment to have some type of opportunity to do that. And I think what you were kind of alluding to earlier was that they could potentially trade this security, which may actually have perks associated with it, which gives them either a VIP status for seating at a restaurant, or some type of ordering priority. Maybe they get overnight shipping for something that they're doing. I mean, whatever that is, those could be incentives for the trading. This is going to be a highly illiquid market, but the ability for it to be liquid is essential.
well, so my perspective, it comes from having been somebody who was involved in what used to be known as the peer-to-peer lending space, and then that got a shiny coat of paint and it became the marketplace lending space, when all of a sudden having more capital was necessary to facilitate that. And it's at the same time informed by the fact that I'm sure we all have tons of people who we know who optimize their rewards points on their credit cards down to the last point, right? And that becomes a gamified construct where most everyone loses all sense of proportionality. They just want to get the points. Sure. So people taking unnecessary trips to other cities so they can get the points is a thing, right? And so when you think about in the construct of local communities, I'm wondering if that is in fact the killer app for why people will be on the other side to say, yes, we're going to fund these businesses.
It partly is it's an important part. To be fair, it's part of the industry right now. I just don't know that it's portable within. I mean, we would love to see a scenario where potentially the presence of those perks or entitlements could help the liquidity of a particular instrument, or on the other hand, say you have a California person who invests in a Massachusetts restaurant because they happen to know the owner, or they happen to, that's where they grew up and they really loved that particular restaurant, but they really have no use for a VIP seating entitlement, so maybe they have the ability to trade that. Either trade it for another like VIP or another like perk, or potentially for money.
I think it's both. You see people doing a lot of things because of passion. We have one of the live offerings in our system right now is for high times, which people know and smoke and love, right? So, and they're at 45,000 investor transactions and counting so far in their offering. People are passionate about it. Are they investing because they think high times is going to have a good financial model and be worth a lot of money? No, they're investing because they like high times. And that's true with a lot of brand conscious things and what kind of perks they're going to get through it. Now, on the real estate side, free weed. I don't think they're doing that. They're doing other stuff. We have, anyhow. On the other side, with real estate, people are generally not investing in real estate because of the perks. They're investing because they're going to get defined returns. We have another customer called Rich Uncles. They run radio ads all over the place. They have hundreds of thousands of investors now at this point, and they just say it used to be a 9% return. I think it's now a 7% return. And people are like, oh, I'm going to give them money. I'm going to get 7%. And if I need to get out, I can, because they manage a liquidity program. But that's very retail, very middle class, and phenomenally successful for them. And we have a huge book of other real estate companies that are doing similar and different kinds of things. And everybody's going to tokenize it, because then they can get away from having to manage their own liquidity program. They can let someone else do it. And so there is a division, even among middle class investors, between those that are investing for passion or for perks and those that are investing because they get a defined return on their money.
And so the sort of, the era of portability, I would imagine will have a dramatically beneficial impact in sort of the token rewards economy going to the next level. I'm wondering from a technical and a cost perspective, I've seen some instances of companies, pushing forth portability solutions. Are we there yet, though, from a cost perspective and a technical perspective?
I think the limitation is neither of those. It's more of a regulatory limitation, right? I think that regulators are comfortable with, managing securities in a database, right? And they're also getting similarly comfortable with a permissioned blockchain managing that data set in a similar way when the authenticators and participants are kind of known entities. I still see long-term it's intranet versus internet. The real value of portability is when it's more on the internet, it's on a public chain of some sort, and you have kind of full transferability between a variety of different participants that are not necessarily permissioned. I think regulators are further away from that, but the intranet approach is the first step to get them there.
Well, to give you like a parallel example, in 1995, one of the top 5 dial-up providers in America was Bank of America, but they weren't connected to the internet. And the reason was they were really excited about internet technology, but that internet thing itself was really, really scary. And I think that we're seeing a really similar path both for financial institutions here, but as much as you're speaking about the regulators, where we got guidance recently from both the SEC and from FinCEN, which is great that we finally have guidance. It moves things forward. But the guidance was all at the most conservative line we could anticipate that it being written at, right? So there was like nothing there that gave anybody more space to operate in than if they were already assuming the worst, for lack of a better term.
Well, so Justin,
and so some of the comfort that we need to give, over time is to help get that line moved so that they can see that, yes, there are going to be risks in a new system. There always are. But there's also new controls that can be put in place. There's new transparency. There's new information sharing. There's new other things. And so instead of saying we need to have exactly the same controls as the last regime because that's what we know and we're comfortable with, there needs to be a reanalysis of, okay, this is a new world, it's a new environment. What are both the opportunities and the risks that get created there? Because otherwise we're restricting the opportunities of what companies like Fundopolis are doing or others on this stage. And then, the people that get hurt by that in the end are frankly the people in the middle class, because regulation, especially heavy-handed regulation, adds cost. And if you're investing $100,000 at a time, you can afford a little bit of extra cost, and your service provider can afford to take on a little bit of extra cost for you. But if you're investing $50, an incremental few dollars one way or another, and an incremental few minutes one way or another, because how much time can you afford if you're investing $50?
I think that's an important point, and thank you for saying that, because the people who benefit from the overregulation are the already well off. The people who get screwed are the middle class and the people that don't have the financial firepower to take advantage of these things. And unfortunately, our policymakers tend to err on the side of caution and look to overregulate because they're terrified of widows and orphans getting fleeced, as opposed to starting from a point of access to capital and access to investment opportunity. And that needs to be the starting point for everybody.
So the overwhelming percentage of the people at this conference, at this table, live in or near cities. And when you think about, the middle class getting screwed, I think a good case can be made for the fact that it's in our rural communities that don't necessarily have as much density, as much opportunities for fundraising as people in the cities. So I'm just wondering if you guys can talk a little bit about your thoughts on whether or not, when we talk about the middle class, there are different middle classes. I wonder if you could just talk a little bit about rural communities that may benefit more by the connectivity.
Absolutely. It's a great point. One of the, I think, the most eye-opening things for us was we did some focus groups and some market testing, and while they came back wonderfully, I mean, people were thrilled about what we were doing, both from the issuer side and the investor side. Almost to a person, nobody knew that equity crowdfunding existed. They didn't know what it is. And they were thrilled because they thought we invented it. And so we were going to be the first company to actually do this. And it's a crazy thing. The Jobs Act was put into place to democratize investing, but it really hasn't democratized investing. So really the hard questions are, why hasn't it democratized investing? And I think that part of that is exactly what you're alluding to. It's middle America. It's not the cities, because the cities and those people in the know, those people who are aware of equity crowdfunding, I mean, essentially those are the people that are participating in equity crowdfunding right now, and we're all trying to get money from the same group of people that are interested in equity crowdfunding. I think it's engaging the other 95%, people that frankly, would be more excited to be involved in equity crowdfunding than even the people that love and participate in equity crowdfunding now, because they don't know that it's available to them. And so the question is, how do we reach them? And that's been something that we've really grappled with for the last 2.5 years. I mean, we've gone to summits where they talk about the proliferation of education, and we can all get involved in education. But ultimately, in order to get somebody to come and listen to education or click on something to get education, they have to actually have an interest in what it is that they're doing and why am I even there. I think, and I think we're betting our company on this idea, is that the way to engage this other 95%, these are just ordinary people. They don't know what it means to have a share in a company. They really don't. They don't know what it means to have a share in their restaurant. Okay, I have a share. What does that mean? But if that restaurant, that business that they love, that grocery store that they go to because it provides, you know, organic vegetables or whatever it is that's important to them and that they love, we know that people in Middle America get involved in businesses that they care about because they do it with Kickstarter, they do it with GoFundMe, they do it with charity fundraising. They get involved in things. If we provide a vehicle for them to get involved with a business that they love, that's how we bring them into equity crowdfunding. That's how we educate them on the presence of equity crowdfunding. The more small businesses in rural America, in towns, in cities across the country, that we can get to realize that this is even here, and that they can ask their customer base and their communities to actually give them the money and support them and create this synergistic relationship between those two that really has never existed before. Instead of giving their money to a bank and having the bank loan it the money to the business and having this impersonal relationship with both of those relationships, you can actually just eliminate the middle person, invest directly in that company, and all of a sudden you have a relationship you've never had before.
So Andrew, can you say something intelligent on that? I mean, is that
I'm happy to say something.
No, I mean, but is that a real? I hope everything. I mean, that's like I'm voting for you in 2020. That's awesome. But I just want to know realistically where we are now from what you see every day swimming in the news flow.
Well, first of all, I agree with everything you said. I think that is an excellent path, and it's going to happen. I also think that, okay, to step back a little bit, there was a tweet that was being circulated yesterday about if you had invested $25,000 or $50,000 in Uber when they were on Angel List, that you'd be worth $250 million now. I think that has a material impact. When people start to show returns on investing in early stage companies over time, that will really raise the profile of online capital formation. But it's going to be many paths. It's not going to be just an Uber. It's going to be the path that you described. Unfortunately, it's going to take time. It's going to take time. It's going to take time for the knowledge transfer for people to understand the opportunities and the platforms that exist. It's going to take time for the regulators and the policymakers to get on the same page to create a more viable and robust ecosystem that can facilitate these type of offerings where it's sustainable. And I always talk about the platforms. A platform needs to be sustainable. It needs to be able to raise the capital that an issuer needs, right? If you need $1.7 million or you need $10 million, you guys need to be able to find a path to do that. And the person who's investing, they need to see a return over time. Blended portfolio, diversified, however you want to describe that. But the platform also needs to be able to make some money. And there's these three constituent parties. They all need to be able to be successful for the industry to thrive, survive, and to grow what it needs to become, adding a touch of blockchain in there from Igor, right?
So let's just talk philosophically for a minute, and then maybe we can open it up to a couple of questions, and I'll just call on you if nobody raises their hand. We all know that most businesses, just about all businesses, are not going to be the next Uber. And as you think about the ability of regulators to kind of do what is convenient often, not necessarily what is good for the long term, is there a risk that if you can invest as a non-accredited investor in your local businesses, that expectations and reality wind up going down two different paths?
I think there's room for both. I mean, I don't disagree that presenting the opportunity of investing in the next Uber is important and an exciting part of the Jobs Act exemption, but I don't think it's necessary, because I think that people right now are giving to their local bookstore that's going out of business. They're just giving money to them. Now, if there was or they're waiting for a white knight to show up. If there was an opportunity for them to get involved through the Reg CF exemption, the ability to save that business, I think there's already a part of human nature that's already doing this in other ways. I think that you don't have to be the best performing instrument to get investment this way, because it's a way of giving money, and actually you're getting something back instead of just giving it.
I'll elaborate on that. I totally agree, because there are multiple reasons for investing, and exactly what you say. I'm going to pick on BrewDog again for a minute. They're a UK brewery, did a Reg A here to build a brewery in this country, and they have plenty of money. So the reason they did a Reg A is because people were passionate about their brand and about what they do. They wanted to be involved. The company wanted them involved as equity owners, because then you'd have these tens of thousands of people walking into bars all over this country going, where's BrewDog on tap? I need BrewDog. I need this bar to have BrewDog. And so it worked well for the company, and they were in it because of the identification they had with the brand, and because of the parties the company would throw, because of the perks they had. And
So as a marketing vehicle.
It's a marketing vehicle, but as a view of an equity form of evangelical engagement with their fan base. I don't even want to say investor base. They call their shareholders punks. The name of the offering was Equity for Punks, and people loved it. So it doesn't have to be Uber. People will make these investments and feel that it's very, very successful by other metrics.
I think that actually shows a really good tie between what's been happening here in the blockchain community and what happens with successful crowdfunding as well, which is if you look at what happened in the ICO market, which was a very different market, but had some hallmarks of where this might be going if it was a little better controlled. The people who were successful there were the people who had built large communities and built communities that were passionate about what they're doing. And I think the same is true in traditional crowdfunding, whether it's been microbreweries or whether it's been High Times or others. Crowdfunding is successful when you build community. And that's a tool that blockchain has actually proven effective and proven good at helping with.
So I'm just going to cut us off.
Yep, sorry.
We ate into our Q&A time, but ending on beer, pot, and community, I think, is a great.
We'll leave it there.
The good news is we have a video telling you a little bit more about Fundopolis, so nobody is allowed to leave. Thank you.
Entrepreneurs, they have a passion, they pursue it. No matter how many barriers are placed in their way. There's no job description for entrepreneur. A fixer, a builder, a doer of whatever needs doing, they get it done. Relentless, scrappy, inspired. They're pushing the world forward and won't take no for an answer. Because for them, it's personal. So why should they turn to the bean counter planners that treat them like an average transaction. Fundopolis lets anyone invest directly in the people and ideas that matter to them, supporting the things they care about, and the individuals shaping their community. For an entrepreneur, we're a lifeline away from the sharks, bulls, and bears. And for investors, we're a chance to give a little to be a part of something bigger. Because at its heart, starting a business and investing in one is about finding something you love, then helping it grow. And now, anyone can be a part of it.
That was it? It's great. It's great. Okay, so we do have time for a few questions. Who would like to ask the first question? Yes.
Based off of your guys' knowledge, I have like a question based off of what's happening here. Is why isn't this, as we know, like investing requires time. Over time, you'll see a result, right? You mentioned Uber and that result. Why are things like this, like the meeting we're having right now? I'm a fellow like high school student. Why aren't these happening at our schools when the people who are really going to take this to the next level are the kids that haven't even graduated yet? You know what I mean? Like kids come out of the womb knowing how to use this phone right here that I've made well over 6 figures on.
So that actually is happening. So there are PE funds now that will invest in your education. They will, basically pay for your college education if they get a percentage of your future earnings. So there are essentially instruments like that, right? And I think that's essentially what you're saying.
They're referred to as income share arrangements. Well, so my question for you is, how did you make 6 figures on your phone?
Trading forex, so trading currencies.
Okay, so trading a global currency.
As well, actually, it was trading Ripple. So last year.
Yeah, same thing. No, I think
When somebody refers to Ripple as
That's
forex.
just forex.
I know.
Yeah, but it's the same concept. But I think you're spot on. I think there's a shortcoming in our educational system that we're not talking about entrepreneurship at a young age. We're not educating people about how a market economy works and how it benefits the masses. And you have a prime example like you, that you were willing to shoulder risk because you risked your own money, right? It was your own money, and you made it happen. That's a really cool story, and that's a story that needs to be told in every school.
All right, so the youth is the future. I think that's pretty clear. Jan, I want to give you an opportunity to just come up here, the CEO and founder of the business, to maybe answer a question or two or say a few words as well.
Mainly, I wanted to thank the panel for their time and their wisdom and for being partners through this whole journey. It's been an incredible journey, and thank you all for coming here. I wanted to share a tiny little tidbit about me. Many people know this, but I'm actually also an orchestra conductor, classically trained. And you might think, wow, that's weird. But there's actually skills that are directly transferable. And just for geeks, I'll point out 3 of them. The first one, in order to have a good concert, you need to strike a chord with your audience. You need to relate to them on an emotional level. You need to move something within them. And that is why I did this. I think man helping fellow man strikes a chord no matter where, no matter when. I think it's fantastic. That's why I'm in this. The second thing is, before the conductor ever does the first rehearsal, it is months and months of intense study, of analyzing everything that possibly can go wrong, find ways to avoid it going wrong, and have systems in place when things go wrong, how to fix them as soon as possible. And that is why actually it has taken us nearly 3 years to do this. We have analyzed this over and over, thought of everything that possibly could go wrong, make sure we had the best partners to avoid things going wrong and do this the right way, so that the first time we are there, we do a good job. And the third thing is, they told you always try to keep your talking to a minimum, so that's what I'm doing now. So thank you very much. Oh, unless there are questions.
Thanks, Jan. And we were actually going to take this opportunity to kind of wrap up who Fundopolis is, but I think we've done a good amount of talk about Fundopolis. What I'd encourage all of you to do, we're looking to engage everybody, and we want to create a viral happening here. We want to engage people across the country to invest in businesses that are local. invest in your community. You can actually use this exemption to empower communities to take control over the businesses that serve them, and vice versa. It creates a really interesting relationship between a business and its customer base if that customer base can also become an investor in that business. Say they have a revenue share note. The more business that they can give to that local business and increase their revenue, that actually becomes an excellent investment vehicle. So it kind of creates the synergistic relationship between those two parties. We think that that's something that's very, very important to the growth and the democratization of investment and access to capital for everyone. It's a paradigm that really has not been available in the United States until recently, and right now nobody knows that it's there. So if I could say something to all of you out there, let's help spread this. Go to Fundopolis, sign up, be informed when we launch, which will be soon, and then get involved. Get involved with your local businesses. If you have a local business in your community that's in danger of going out of business and it's a valued, treasured business in your community, get some people together to kind of put together something that could conceivably go on our platform, where you could, as citizens and as community members, actually invest in that business, save it, and because you have that kind of now synergistic relationship with them, there's a possibility that that could become a profitable entity now. I mean, we always use the example of bookstores, and I think so many people have similar examples within their community, but I know personally at least 5 people that had businesses in their community that went out of business. They were waiting for a local white knight to show up to kind of basically take over all that risk. It can be spread amongst all of you, and you don't even have to come up with $10,000 or $100,000 or $200,000. You can come up with $100 and be a part of that solution. That is true democratization. And with that, I would just say, just stay connected to our site. If we have any time left, we can do some more questions, but thank you for coming.
We have 2 minutes for 2 more questions, if anybody has any. Who's your biggest competitor,
Yeah.
is the question.
I think our biggest competitor is ourselves. I mean, within the marketplace, there are worthy competitors. There's Seed Invest, there's WeFunder, there's Start Engine. Those are some majors. There's Republic, who's blockchain based as well. But ultimately, I mean, it's about connecting with that other 95%, and with that other 95%, there are no competitors. They don't even know that it exists. So if we can find a way to reach those people, I think that's our target, not somebody else. I think there's room for all of us.
The reason why I ask, I opened up my own business in Bakersfield, California. It's a wholesale distribution company. I sell new tires and wheels. I took my 20 years of experience and decided to do my own thing and fold in crypto and Bitcoin and blockchain technology. I've got a Bitcoin ATM at my warehouse.
Let's talk afterwards.
Very interested in what you guys are doing, and I think I could do something.
Fantastic. Let's talk. Yeah.
Thank you.
And we're hearing the same. I mean, we've got actually a line of issuers already lined up. We have over 20 letters of intent signed of companies that are looking to raise with us, and wherever we go, we're getting kind of similar reaction.
Great. I think we're out of time now, so thank you very much.
Thank you.
Yeah, thank you. That was great.
Thank you, Andrew. Hey.